Good evening, everyone. My name is Giancarlo Sandrin, and I'm the president of CFA Society Italy. This evening, we are here with Martina Kambuchi, head of regulatory outreach for CFA Institute. Together with CFA Institute, we are going to talk about sustainable development goals and how the policymakers and corporate are adopting those objectives. We know that there are 17 sustainable development goals agreed upon the major world leaders in 2015, and their aim to create a better, fairer world by 2030, ending poverty, urgently addressing climate change, and ending inequality. They have been adopted by almost 200 countries. And we know that the development of appropriate policies to achieve SDG goals is a key priority of the Italian presidency of the G20. The COVID-19 crisis may represent an opportunity for the G20 countries and the Italian presidency and European Union to advance the implementation of the SDG agenda, while promoting a sustained, inclusive, and sustainable growth. I don't want to take too much time to our panelists. We will have two panels. The first one will be the regulatory approach on national and European level. The second one will be the perspective from market and companies. Just a couple of things about housekeeping. Please remind that panel 1 will be held only in English. Panel 2 will be held in Italian with English simultaneous translation. You can select the language from the headset icon in the lower right corner of the video. You may also address your question via the specific chat available on the website. So thank you very much, and I will leave the stage to Martina.
Thank you very much, Giancarlo. And it is my great pleasure to take part in this debate and to moderate the first panel with two excellent panelists, Martina Kambuchi, who's currently head of international relations at CONSOB, with responsibility for developing and delivering the authority's strategy for international engagement with foreign regulators, governments, and other stakeholders. And of course, that is crucial in this G20 year. She acted as chairman of the Council Working Party on Financial Services under the Italian presidency of the Council of the European Union in 2014, and then as coordinator of the ESMA task force on benchmarks regulation draft second level measures. And indeed, Martina, I have known you now for the last 7 years, so it's really a great pleasure to have you here today. Now, Andrea Beltranello, also very well known, very welcome, Andrea. Andrea is a member of the cabinet of Valdis Dombrovskis, Commissioner, Executive Vice President for an economy that works for the people. And that title says it all, because that reflects the SDG goals in a nutshell. So it's a very convenient title. He was previously in DG FISMA, a deputy head of the communications unit in the Commission's Directorate General, and a policy officer in the unit responsible for Capital Markets Union, and a policy analyst in the free movement of capital and application of EU law. And between 2007 and 2012, he worked as an economist at the OECD. So again, Andrea, you have a long experience. CMU holds no secrets for you, but also trade policy and, you know, the EU in the international world. So with my two panelists, I really hope that we'll, in the minutes that we have, we'll sketch some of the issues that are landing at the EU level, some of that are international, and some that land as a specific responsibility for the Italian presidency of the G20. Before I launch my debate with both of them, I just want to take you to a COVID survey, two COVID surveys, in fact, that CFA Institute has done, one in March 2020 and one now in March 2021. Why is that important? Because our members globally, 170,000 of them, but also we can define them as per the EU, for example, really look at economic recovery. And in COVID times, this is important because There is a very ambitious plan globally with the SDGs. There's a very ambitious green plan, and we have a very large EU recovery fund that is trying to stimulate economic recovery. So what are the signs that our members see? What they do see back in 2020 already was that regulators and policymakers should be taking a proactive role and consulting with firms in the financial industry on possible solutions and designing a new regulatory framework, aiming at restarting normal market conditions as soon as possible. And that indeed, since March 2020, that has been happening. I think in all my years working in the finance industry and in the 15 or so years I worked on EU regulation, I've never seen so much working together task forces, really where there is a desire for both the financial industry, companies, and regulators and policymakers to kickstart that economy and to make sure that post-pandemic we are fitting that economy to the conditions, but also to this ambitious agenda. Now, in 2021, the latest survey, really what we're starting to see is that our members are seeing a recovery that is going to be more fragmented. And that is both at global level and at EU level. Whereas in 2020, we saw a U-shaped recovery, which was more even in its recovery pattern. Now in 2021, there is a K-shape. A K-shape is fragmentation. Different parts of the global economy or the EU economy are recovering at different rates and different magnitude. And that is a problem when you're trying to establish an ambitious agenda for the green economy. Again, it is also something which is being acknowledged by our members is that regulators have overall been addressing the pandemic in the correct situation and really been addressing it in a forward-looking manner. And I think that is important. That message was given early on in the pandemic, but it is really pulling through. So I think that situates a little bit the scene for the discussion we will have. One last point is we have produced quite a large global study on climate change, which is one of the goals, I think goal number 17 in the SDGs. Really, again, calling on regulators and policymakers to ensure that the regulatory frameworks for carbon markets are designed to deliver transparency, liquidity, and ease of access for global market participants and similar standards across jurisdiction. Now that message, of course, refers to the carbon markets, but it's applicable to everything. There's a desire for our members to see a global standard development. And I think it's a challenge in the fact that, of course, the EU is running very fast ahead and some other parts of the globe are not. So I will be looking for some answers from my two panelists. Now, without further ado, let me ask Andrea to start with an initial statement, giving us a sort of overview, and then I'll turn to Martina. Andrea, the floor is yours.
Thank you, Josina. Good afternoon, and thank you to the CFA Society, to the CFA Institute for organizing this event and for inviting me to participate in it. I'm very happy to be here with you. I think I will start by maybe asking a question that a lot of people are asking themselves, and it's a very fair question, I think. If the pandemic has had an impact on the implementation of the Sustainable Development Goals, and more generally also on our efforts towards let's say, fighting the climate change and dealing with the environmental and social challenges that we have, I think, as I said, this is a very fair question. But certainly from the side of the European Commission, our commitment to implement the SDGs effectively is even greater following COVID-19. Why do I say that? Well, I think the pandemic has shown even more that we need to build a more resilient society, a more inclusive society, and a more resilient economy as well. We have been working on this now, especially since the beginning of the mandate of this commission under President Ursula von der Leyen. We have really made the implementation of the United Nations 2020-30 agenda one of our priority, and it really goes hand in hand with the massive funding that the EU is providing through its multi-annual budget and in particular through the recovery plan. Because if you think about it, both the SDGs and our recovery efforts share the same objective. So we want to strengthen resilience. We want to prepare society and the economy for future shocks. And we also want to promote and to accompany the economy and society towards the green and digital transition as well. So the SDGs have been really an intrinsic part of the work of the Commission. We have really integrated them across all our legislative proposals, all our initiatives, all our policies, our strategy, including the funding. And indeed, all the SDGs feature very prominently in the political priorities that President von der Leyen has laid out. And I would like to give you some examples just to be more concrete. So we are really designing some very transformative policies, such as the European Green Deal, the annual Sustainable Growth Strategy, the European Pillar of Social Rights, the Digital Single Market, the Skills Agenda. All of these big priority projects of the European Commission really contribute to some of the key SDGs. Actually, I would say to all the SDGs. We have, for example, embedded sustainability in the European semester, which is the framework, the instrument that we have to coordinate the economic policies of EU countries. And obviously, this also helps the EU member states to follow up on their individual commitments. And in particular, in the semester, we have started since 2 years ago to publish an annual sustainable growth survey. So basically focusing on integrating the SDGs into the European semester of economic coordination, for example, including aspects of environmental sustainability and of fairness. And as I mentioned before, we are also integrating the SDGs in the recovery plan, which shows that the post-pandemic recovery can also be an opportunity to relaunch the implementation of the SDGs after the pandemic. So, for example, the National Recovery and Resilience Plans, which the Commission is adopting these days, and actually just the other day, President von der Leyen was in Italy, so on the day where the Commission endorsed the Italian plan. And so these plans should really focus on the green and digital transition and contribute to the achievement of the SDGs. We have, in fact, some specific targets of much of the spending of those plans must go, for example, for the green aspects, but there are also many other objectives that touch upon the SDGs. And before I conclude my introductory remarks, I would just like to make 3 brief points. So the first point is on the importance of monitoring progress. And because of the pandemic, as I was starting with the question at the beginning, I think it's fair to say that progress towards the SDGs may have been compromised somehow. So it's important that we monitor indicators that help us to measure such progress. And this is why the European Commission just a week ago or so has published a monitor report on SDGs, showing just how the pandemic has influenced the way the EU is progressing towards implementation of the SDGs. So monitoring, measurement is already very important. Secondly, it is not only about how we implement SDGs internally in the EU, but also to underpin our engagement in the world. And I think that later in the panel, we will be speaking a bit more about that. This is important to implement the SDG globally, and we are doing this in the EU, for example, through our trade policy, through our international partnerships, and so on. And finally, I would like to say and to stress that it's very important for us as policymakers to engage really with all segments of society, NGOs, private sector, academia. So I think events like the one we are having today are very important, and I can only invite stakeholders to organize more and more of this. So many thanks, and looking forward now to the discussion in this panel.
Thank you very much, Andrea. And now I'm going to turn to Martina for your initial statement. Martina.
Thank you, Josina. Thank you to CFA, and specifically for your very friendly introduction of myself. Thank you for that. Let me start with some initial notes on the Italian presidency of the G20. After the summer break, they will have to focus on the deliverables that were initially announced in a number of areas, of which, as known, a prominent one is that of the sustainable finance, which is at the heart of the agenda together with the COVID-19 recovery. A very important intermediate step from my point of view has been so far the re-establishment of the G20 Sustainable Finance Working Group, which contributed very much to advance the agenda in the sustainable finance area. And why I say this, that it is an important step. This group was firstly created under the Argentinian presidency, but unfortunately was not active under the Saudi Arabia presidency. So I mean, this has a clear political sense. But then let me focus more on the deliverables. You all know that the G20 work is essentially taken forward by the FSB. So the deliverables consist in an FSB report on the advancements achieved in the area of standard of disclosure in sustainable reporting. And this could also lead, I think it's still uncertain, but could also lead to an update of the recommendations from the Task Force on Climate-Related Financial Disclosure, which I'd like to remind that CONSOB recently formally endorsed. A second deliverable is an FSB report, which is an assessment of the climate-related financial stability risks, of which an important part is the identified data gaps. Specifically on the issues disclosure, the FSB seems to have interestingly found, at a time when the debate is jeopardized by the IFRS Foundation initiative to find a global common standard, a mission to be accomplished meanwhile, which is the development of reliable different metrics for those jurisdictions with additional ambition beyond the baseline that the IFRS is due to identify, or that want to proceed at the speed of peace. And in that context, the TCFD framework that I was mentioning before is definitely proposed by the FSB as a qualified starting point. The FSB roadmap aims at dealing with the management of climate-related financial risks as an integral part of the overall management of financial risks. In this context, it is working on a twofold basis. On the one hand, in the perspective of no financial entities. On the other hand, from that of financial institutions, by way of assessing their exposure to climate-related risks, also with a view to better understanding which financial institutions' exposures to climate-related risk present the potential to be more easily transferred between different financial sectors, with a significant impact on the overall financial stability, I would say. An additional contribution deriving from specifically the work done by the Italian presidency is the acknowledgement that the way in which the authorities may more correctly assess and monitor the degree to which the financial system is resilient to climate-related risks depends on the capacity to also develop both forward-looking financial stability metrics and scenario analysis. And I personally believe that after the IFRS Foundation initiative was endorsed in different international contexts, and we will have now just to wait until they will actually be in a position to deliver this global common standard, these latter topics about developing these differentiated metrics and scenario analysis are more and more gaining the attention of regulators. IOSCO is also significantly contributing to advance the agenda for the realization of the ESG goals by also integrating some of the undergoing works at FSB level, even from a slightly different angle. You know that CONSOB is fully involved in the IOSCO work, and for this reason I'd like also to give an update on the ongoing work stream. You all probably have memories that the IOSCO publicly supported with a press release on last May the forthcoming work by the International Sustainability Standards Board under the IFRS Foundation. In that press release, the most important message was the building blocks approach that IOSCO puts forward, according to which the ISSB standard would represent just a common global baseline, but with a view to allowing interoperability with any complementary standards to specifically meet the needs of categories of stakeholders, which means, in other words, that while an initial focus is only possible on climate, IOSCO will then expect and consider absolutely important to work on the other ESG factors, but also to meet the requirements set by certain jurisdictions. Interoperability will matter very much. This is to take into consideration that some jurisdictions, namely Europe, have the ambition to go beyond the materiality of sustainability-related disclosure to be assessed in terms of enterprise value creation only. But how can the IOSCO actively contribute to all this? First of all, I would say that through the role in the monitoring board of the IFRS Foundation, the IOSCO will have a say in the process of establishing a solid governance of the ISSB. For instance, to manage possible conflicts of interest. Secondly, it can help the IFRS Foundation in setting up a multi-stakeholder consultative committee. And third, IOSCO is also devoting great attention, not just to finding a common standard, but also to setting up robust frameworks for audit and assurance, whether it will be ensured at national level or hopefully on a cross-border environment. As for the other IOSCO work stream, there is one focused on topics ranging from the role played by asset managers on sustainability matters and the disclosure required by them, to the regulatory approaches relating to product level disclosures. And finally, also to the role of financial and investor education in sustainable finance. I also found very interesting a third work stream, which is more focused on ESG ratings and other data products. In this area, IOSCO started with a stock-taking exercise, whose main findings confirm there is an absence of consistency even on the definitions for rating or data points and what these intend to measure. The situation is made even more complex in connection with a lack of transparency about the methodologies underpinning those ratings or data points. It could be, as the same, very worrisome, the circumstance that certain sectors or geographical areas are not covered with respect to others. And it is clear that it doesn't match with the growing appetite of investors towards certain investment strategies. In addition to this, IOSCO also found evidence of a need to duly consider the management of conflicts of interest in the production of ESG ratings, and that a better communication with issuing companies would be beneficial to ensure the ESG ratings are based on sound information. On the basis of these initial findings, the working group is currently preparing a document to further consult with relevant stakeholders. And I have reasons to believe that these are also the starting propositions on the basis of which the EC could deal with this subject matter within its forthcoming renewed financial strategy, strategy for the sustainable finance.
Thank you, Martina. I think you've given us an extremely complete review of what is happening, whether it's at the G20 level, but also looking at IOSCO, which is very important because they represent the regulators globally, and very often initiatives that come through IOSCO end up being enshrined into law, and we've seen that with benchmarks, for example. So I think what I would like to dig in a little bit, because of course you're representing the G20, is looking at, we've seen some different comments coming out of the G7. How does that difference in implementation of SDGs between the G7 and G20 agendas, how does that function? Can you enlighten us a little bit?
Well, I mean, that will take maybe more time that we can use in this debate, but I can say that I found very, very interesting the part of the 5G press release in which it is made clear that the G7 recognizes the growing demand for information on the impacts that firms determine on the climate and the environment, and the connected needs to promote impact reporting initiatives, including but not limited to reporting on net zero alignment. In my view, this is a clear sign that the G7 is, even if slightly, but it has gone beyond the current mainstream. So something a little bit beyond what the G20 and all other international standard setters are accepting as the mainstream currently. So it's been very welcome.
Yeah, and I think this is, of course, the challenge for, and we'll see that hopefully in the second panel, is, you know, how companies trying to deal with implementing all these changes in terms of reporting. They're seeing the geopolitical consequences, the extreme ambitions of multiple state systems like the EU. This is a challenge. It's a challenge for the financial markets. It's a challenge for regulators. And again, it has an impact on other areas. And I'm going to turn to Andrea because, of course, we're looking now at the WTO. How can the European Commission, looking at trade and climate initiatives in the WTO, facilitate the achievement of SDS? So we have another layer yet with the WTO. Andrea, enlighten us as to that, please.
With pleasure, Josina. Actually, on this area of trade policy and the contribution it can give to sustainability, to climate agenda, to the green agenda, we adopted in February a communication strategy, which is called Open, Sustainable and Assertive Trade Policy. So it basically sets out our trade strategy for the next years. And here, the contribution of trade to Green Deal objectives is very prominent. I think I can say that it's really the greenest communication on trade policy that the Commission has ever done. We really put sustainability at the heart of our trade policy. Of course, this has to be balanced and realistic, because trade can do a lot, but it can give really a positive contribution to climate and environmental objectives, but its role is a supportive one. So it cannot substitute for the adoption of right domestic policies, the same as having the right sustainable finance policies cannot replace other policies which are equally important, like putting a price on carbon, for example, or other type of policy. So I think it's important to put that in that context. But it's clear that the EU is a major trading bloc. We have an incredibly vast network of trade agreements, bilateral trade agreements, and we have also very important role in the multilateral scene, so at the WTO. And because trade can be a force of good, it's important that we leverage it. So, for example, in our bilateral agreements, we have really a platform that we can use to engage with our partners from all continents to advance certain elements. And in all our most recent agreements, we have trade and sustainable development chapters where we have binding provisions, commitments on labor rights, social rights, environmental issues, climate issues, and so on. So already this is a very good basis for us to discuss with our partners. And we now propose to go a bit beyond there. For example, we have proposed that the Paris Agreement becomes an essential element of our free trade agreements, meaning that if there is a breach of that, we can unilaterally suspend the whole agreement, which I think you can qualify as a sort of nuclear weapon, you know, in that respect. We also want to go a bit beyond, let's say, the commitments that we already have with the G20 countries, for example. We committed that we will not conclude any new agreement with G20 countries which do not respect the Paris Agreement, do not implement effectively the Paris Agreement. So we are doing a lot from the bilateral agenda, but obviously the multilateral arena is in the DNA of the EU, and that's why we really want to promote a very ambitious trade and climate and environment agenda in the WTO. We have quite a number of countries that are happy to work with us. So we have already promoted this WTO Trade and Climate Initiative. we are working towards the WTO Ministerial Conference that will take place in November, where we hope that we can have a good result on trade and climate. The new Director General WTO, Dr. Ngozi Okonjo-Iweala, she's also very much putting this at the heart of her term. And so now a bit the challenge is that we have a lot of initiatives at the moment, on not only on climate, on plastics, on circular economy, on biodiversity, on, for example, ending fossil fuel subsidies. We have about 50 WTO members which are very interested in working on these issues, and we can certainly work to liberalize more trade on goods and services that have a positive environmental impact, on more transparency on domestic subsidies, for example, on fossil fuels. So I think there is a very, very big agenda, and we have a momentum now also with the new US administration. So we should really, really seize on that agenda. And one point to conclude these remarks, I would say always we need to bring others along with us. And for example, developing countries may have a bit, in a different position than we are here in the EU or in the US. And we have to also take into account their concerns and really bring them along with us, and not give it the impression that we are creating more protectionist agenda or that we are basically shutting them out.
Thank you, Andrea. And I think it's really, I have never, in all my years working on regulatory policy, I have never seen so many initiatives all pulling on that same direction. And that is impressive. It's also impressive to see how the political changes, of course, we've seen the Biden presidency really affecting a huge change again and pulling behind that green agenda for the world. So I think the next few years are going to be mind-blowing in that sense, but mind-blowing for companies as well, as they try to struggle. In the next part of this panel discussion, we're going to look a little bit on some of the implications for companies, which you will take further with Giancarlo's panel. I'm going to look at Martina. CONSOB conducted a call for evidence on financial reporting recently. Martina, what were the main takeaways of this call for evidence? Because of course, this is really important in terms of sort of building that information that companies need to give in order to pull all together to what we're trying to achieve.
Yeah, the final quarter of 2020, CONSOB launched a call for evidence to gather some data on the overall degree of implementation of the NFRD, which first, I'd like to remind that first applied with reference to the financial year 2017. To be very brief, let me just mention the key takeaways. Respondents believe that the publication of no financial disclosure declaration leads to benefits within the company, but also externally, especially by strengthening the relationship with stakeholders. 35% of respondents believe that the greatest difficulty lies in finding information for the purpose of compiling and no financial declaration, and 25% associate the difficulties to the excessive costs related to drafting the no financial reporting. Overall, it was found a strong support for the standardization of reporting methodology, to maintaining enough flexibility to allow companies to include in the materiality analysis and information deemed relevant at the level of the single company. Strong support was definitely found for a simplified reporting standard to be defined for SMEs, to encourage such a kind of information to be provided by SMEs, with a view also to reduce the information asymmetry. The most supported policy option is the definition of a simplified information standards for SMEs at EU level, which could be voluntarily used by those SMEs that are not subject to the obligation to draw up no financial reporting under European legislation. But you all understand that these considerations on the scope did not take, at the time of the call for evidence, into consideration the proposal that the European Commission tabled recently of a new CSRD, which is due to change the landscape that the respondents to the call for evidence launched by CONSOB had as a background. Interestingly, as a way to increase the quality of the reporting, all respondents expressed their hope for greater interaction between the undertakings and companies issuing sustainability ratings. So this somewhat confirms what I was saying before about the main findings at the IOSCO level, also with respect to this interaction between issuers on the one side and providers of ESG ratings on the other side. So I do believe that, I mean, even if limited to Italy, these findings add on the impact assessment conducted by the European Commission, and will represent the basis on which Italy will most probably contribute to the negotiate on the new CSRD.
Thank you, Martina. I'm going to look to Andrea on the Corporate Sustainable Reporting Directive. It is a challenge. It's an ambitious piece of legislation. Is that going to achieve that greater comparability and reliability of non-financial disclosures, or is there still further steps after CSRD?
Well, we certainly hope that it will improve the comparability, because I think that one of the main messages that we got from the corporates during the implementation of our sustainable finance agendas, that we focused a lot on the disclosures from the intermediaries. But the intermediaries need to find this information somewhere. And I think it's a very fair point that we got. And this is why we put now so much effort into improving the current, let's say, non-financial disclosures, which now we changed the name into corporate sustainability reporting, which Martina mentioned. And I think it's quite reassuring for us to hear that, for example, things that we propose, like the standard, the simplified, more proportionate standard for SMEs, which will be mandatory for those SMEs that are listed, which are now brought in the scope, or at least Commission proposed to bring in the scope of the rules, but also for those SMEs which will not be in the scope, but who voluntarily want to report, they can also use this standard. So I'm pleased to hear that this is something for which there is a demand. I think it's important that we underline that this focus on all ESG is very much something that we care about in Europe. So, for example, we really try to be very consistent with the TCFD disclosures framework, but that's very much focused on climate. We go beyond climate. We also care a lot about double materiality, as Martina also was mentioning. And actually, I have to say, in the Sustainable Finance Strategy, which, if everything goes according to plan, the Commission will adopt on the 6th of July, there will be a lot of focus on this concept of double materiality, as there will be a lot of focus on the global aspects. And here, I think, Josina, this is where another challenge lies, which is the make sure that we have a common language globally. We need obviously to adapt to local circumstances, but we really want to build on and align as much as possible the standards that we will be developing here in Europe for sustainable corporate reporting, with standards that hopefully will also be developed abroad. The thing is, there is a lot going on at the moment, and a lot of initiatives are converging, but still we don't have this international standard. And in Europe, we don't want to be held back in a way. But this is not because we think we can do things better than the others necessarily. It's just that, we think this can also be something to promote more of these standards internationally, which is what we want ultimately, which we think is what will benefit companies after all. So I think these are the main challenges, really, how we implement it, how all companies will use them, that it would be easy for them to use, that it would be really providing the financial intermediaries the information they need, that it can be then scaled up to international level. And then I think I would add another point on ratings, which also will be important because Martina mentioned it before. And this, I think, is something that will also feature in our sustainable finance strategy, because it's something that we've been assessing and studying, but we haven't really taken any initiative so far. And I think in our strategy, we will, I cannot kind of present everything, but we will be setting out the path on that as well for the near future.
Thank you, Andrea. And I think you've sketched very well, you know, the wish of the EU to lead, but also to be aware that this creates sometimes a difficulty. And we see that at CFA Institute, because of course, our members are not only in the EU, they're globally. And very often I get drawn into conversations about by my US or my APAC colleagues saying, well, you know, the EU is driving ahead. Do they realize this is creating difficulties? So I think the information and the more open we are with what we're trying to achieve at the EU level, the better it may be understood and by other regions. I think one of the issues that we will see, and probably in the second panel you will also take a look at, is there should be assurance on the sustainability reports. But it is a difficult challenge, this assurance, because comparable, understandable ESG data is still all over the place. It's something that we at different surveys throughout the years, we've highlighted this. How can we ensure that this comes through the right way, and that it's not too much of a diversity, and also that it's right for the companies that have to deal with these assurance statements? I'm going to look at both of you, Martina and Andrea, who would like to answer this first?
Well, I can give a very personal point of view on this, because this is a question that actually I was asking myself in reading the proposal, because it seems that the European Commission just considered the limited assurance versus full assurance, and that the negotiate could probably be dealing with these two extreme, but I wonder whether reasonable assurance, which is something which would also be considered as viable, could instead represent a possible way forward in a puzzling and difficult situation, as Josina was pointing out.
Yeah, we made a choice. We made a choice indeed. We had several options which we assessed also in our impact assessment for the proposal. We chose to go for limited assurance. We thought that at this stage it was the more prudent approach, because obviously, you know, there are always trade-offs in whatever policy decision you make. And while we are not against reasonable assurance, but obviously this is costly. This is more burdensome for the companies who have to get that. And therefore, we, in the end, thought to opt for a more staged approach, with the possibility that this will be introduced later as a harmonized EU requirement. But I recognize that there is a trade-off, and that we had to make a choice. And now it's obviously for the European Parliament and to the member states, the governments of the EU member states, to see how they want to bring this forward. Yeah,
I think, you know, I've known the EU to be pragmatic always, and to use phased-in approaches. So I think that is part and parcel of how we grow at the EU. I'm going to turn to the audience if there are any questions. I don't see anyone on the chat, but I'm going to leave some room because we have 5 minutes left of this panel, and otherwise I have another big question I want to ask my panelists. Do I see any questions? Now is your chance to put it in on the chat. And if not, let me go to my final question to both my panelists. And again, we have this European new future initiative on sustainable corporate governance, which is a difficult one because, of course, there are corporate governance national codes. Italy has a very strong national code, which was revised. There are differences there are cultural differences in corporate governance. Corporate governance really seems to be very much a national issue. But at the same time, we have international investors who want to have a better view. And if we are trying to be a single market, should we not have that at the EU level? This is difficult. So how can we deal with that? And again, I'm going to ask either Andrea or Martina. Once maybe Martina come in first because of all that development from Italy and maybe how you see that perspective now at the EU level.
Thank you, Josina, for giving me this right to speak the first. I don't think that is nothing not known that Italy, as you already said, is quite reluctant and skeptic about the possibility to deal with corporate governance issues in so much harmonized manner as the European Commission suggested, actually launching that survey some months ago on the sustainable corporate governance. But in addition to this, there is another reason why I do believe that maybe it would be too early to address this issue at the European level, because it's about to start an activity of review of the G20 OECD principles on corporate governance. And I would expect more consideration, additional consideration in that context to sustainability related issues. So maybe it would be better to postpone a little bit such a kind of topic to be addressed in the current proposal by the European Commission.
Thank you, Martina. And of course, I would remind, maybe for our audience who haven't seen that there was a proposal for a piece of legislation that was pushed back and delayed for a bit. I think what is interesting is that different countries have aligned themselves differently on this. But I find it interesting that Italy, but also some of the Scandinavian countries were against pushing further at this stage on an EU-wide corporate governance. That was a surprise, but then again, once you reflect, there's much more of this independence also on boards, accountability, etc., that you can see in some of the Scandinavian countries. Andrea, what is the view of the Commission on this, and how will you push this agenda forward?
Well, first of all, the European Parliament called very strongly on the Commission to come with the EU-level horizontal rules in the field of sustainable corporate governance, and so did the member states in some council conclusions. So in a way, we also have this kind of political push, if you want, from parliaments and member states to do this. At the moment, we are working still on the impact assessment on the different options. Indeed, with a view to submit some proposal to the Parliament and to the Council. This will not come before after the summer. So because we are still assessing internally different options, we also have a very lively debate inside the Commission on what's the best way to go for this. The objectives, I think we all share. We want to foster sustainability, resilience of corporate decision making. And in fact, this initiative that we are discussing would include two parts. So one would be on directors' duties, so when it comes to taking into account the long-term interest of, not only of the shareholders, but of stakeholders, and then the due diligence part on how companies basically carry out this due diligence on the environmental, social, human rights aspects of their activities across the supply chain. On this, we had the public consultation indeed, which Martina was referring to, where we had almost 500,000 responses, and there were some differences, but I think overall the message we got was quite positive on the initiative itself. Of course, we need also to take into account some concerns that have been expressed, for example, by corporates and in particular by SMEs, so we will have to take those concerns very seriously. We also heard the concerns of some member states who, in particular, you mentioned them, Josina, who have made them very clear. And there are also some specific issues concerning the scope when it comes, for example, to the due diligence and, speaking about SMEs in particular. There are obviously always ways to alleviate the burden, be that direct or indirect. So there are ways basically that we can take a more proportionate approach, as for example we've done with the Corporate Sustainability Reporting Directive, which has a link with this initiative. There are also concerns with the enforcement mechanism of this initiative, so we will have to see to what extent it's based on sanctions or liability of the companies. They're very complex issues. We not take it lightly. Please be reassured of that, and we will also be assessing them very carefully as we propose this legislation, which will come after the summer, as I said.
Well, we are just on time, and I'm only 1 minute overdue, which is wonderful. I thank you both very, very much. You've been very open, and I hope I haven't pushed you into uncomfortable situations, but I think we had a very frank and open discussion. Thank you both very, very much indeed. And over to you, Giancarlo, for the second panel. Thank you.
Thank you very much, Josina.
Thank you so much, Josina. So I'm now ready to introduce and present our second panel. The panel will be made by Damiano Carrara, the head of ESG and Sustainability Scenario Analysis and Culture Diffusion from Intesa Sanpaolo. And then we have Federico Baroncello, ESG Investor Relations Manager from NL SPA. We also have Manuela Mazzoleni joining us, Director of Sustainability from Assogestione. Unfortunately, she had a problem, but she will make whatever she can to join us with a final question related to the world of asset management. So we've been through the space, the universe of reporting. But before addressing more about this, let me start, if I may, from Mr. Carrara. Damiano, my question is, what is the role of a financial institution to support ESG goals? In other words, how can a bank make sure that it can support these extremely ambitious goals that borrow from various industries, clean energy, and we'll discover that it's not really unrelated from the financial world. And moving on to poverty, to inequalities. So the floor to you, Damiano, on this first question, please. Thank you. Good, thank you. Thank you for having me. These are important matters on sustainable development and SDGs. I represent and I stand for a bank which by its size is, as you know, a bank of systemic size. And as a result, it can play a major role in guiding, driving other corporations very much towards sustainable development. And proof of this is that in January 2020, it has been included in the SDG 2000 with 2,000 companies belonging to 7 key industries that worldwide have the possibility or are regarded as having, the tools to influence the achievement of SDGs. So in order for a bank to do that, it has to start from its strategic priorities and the analysis of this. The traditional materiality analysis with the consultation of stakeholders is something that we have also done when defining our sustainability strategies. The next step, however, getting to the crux of the matter, is being capable of connecting, relating one's own strategic key priorities, tying them in with the SDG priorities. So we have done that too. We have looked at the targets, the goals that lie beneath the SDGs to identify, to detect and capture the goals where they are most meaningful or where we can impact most, where the activity of the bank is most meaningful. In the non-financial disclosure, in fact, there is a report that stands next to the SDGs, the most meaningful actions, measures, projects adopted, the link with the corporate plan, business plan, and the material matters and issues that lie at the basis of this corporate plan. So what has emerged is a plan very much focused across 12 of these goals. And this is a feature of all banks, financial institutions. In other words, that unlike, industrial businesses or companies, it acts as a bridge, a link between the productive world, asset management, investments, financial means, and as such, it has, a certain influence and power, weight on certain industries to stress and guide more goals than would be the case for an industrial company. For instance, we have identified the possibility of impacting more on goals that relate to social and most urgent environmental challenges. Goals 5 and 10 on reducing inequalities being one. Just like other companies or corporations, we are very much committed on gender equality, diversity, inclusion, very much so. We got the first international certification, by the way, on gender diversity. Now, looking outside, here what we find is the role of the bank, of any financial institutions. Strictly speaking, we have two strategic priorities amongst our material themes and issues, financial inclusion and support to production transition to a greener, circular economy being the other one. Now, they refer to goal 8 on economic growth, 9 on innovation infrastructures, and the group of other goals that are more strictly environmental from goal 13, 7, 12 on climate change, energy transition, you name it. And the role of the bank in this connection is not to have a direct impact because understandably, especially in terms of energy consumption, of course, the bank uses and consumes energy, but this doesn't compare to what is being consumed by an industrial company. The role of the bank here is, guiding, driving capital flows, which is the kind of role that has been recognized, and we cover that in the previous panel. This is being recognized also by international global institutions, as well as by the regulator and the legislator, the lawmaker. Now, we have a host of initiatives that can be extremely, how can I say, effective, performing, to contribute to the SDGs. They range from, asset management products. They have been the first instruments, in fact, adopted by the financial industry, by the financial world to guide the capital. We have 40% of our funds of Eureason, our asset management company. It's about 73 billion euros. They have social and environmental features or SDGs in them, and they are very much in line with the classification criteria of the SFDR regulation just in force. So there are huge assets that are all moving towards supporting environmental sustainable development. And then we have the green bond. We have issued lots of them for the circular economy and renewable energy. Green bonds now have achieved around the world, mind-blowing figures. And what is also very much interesting is that half the green bonds in circulation around the world is euro denominated, which testifies to the commitment of the financial system into that, together with the European Union as a whole, when it comes to, you know, directing the and promoting, fostering sustainable development. Then another impact is lending with a high social impact to categories that have problems and challenges in terms of access to credit. And two instruments, I think, stand out, and they can really make the difference as they are going to be broadly adopted in the banking industry. Sustainability-linked loans is one. So Intesa has dedicated a specific platform to that. And the other one is funding, lending for circular economy. These are two products, and by their own nature, these two products are extremely effective, very good to support, to accompany the transformation, the migration of the productive system, so to stand next to the other companies in their sustainable development, very much in line with the SDGs. Sustainability-linked loans, again, they have one feature. They foresee a premium on the cost of funding if the company achieves, and when the company achieves certain key performance indicators in terms of sustainability goals in the three spaces, the three traditional areas of ESG criteria. These KPIs are defined and set out by contract. They are controlled and monitored through the publication of the financial statements of the company. So there is engagement going on, direct engagement with these, which is very strong, by the way, of the company where the credit has been lent, for the company to truly implement the projects claimed, and that, you know, it really reaches the goals set. Now, what is very interesting is to point out that the key KPIs that have to date been used in the lending and funding activities which we have done, they regard the use of procurement practices, renewable energies, or the amount of sales invested in the support of communities, or the training given, the platform for corporate welfare initiatives. I mean, I'm talking about a very rich, wealthy, broad range of SDGs. The other key aspect, or KPI, is engaging employees on sustainable development themes. So through the lending, through the funding of the company, setting out a certain number of engagement and KPIs, the effect we're looking for is a multiplier effect all across the pipeline of the company being lent to. The other initiative, which to me seems extremely important to guide sustainable development, is anything that is being done to promote circular economy. Now, Carlo Messina, our CEO, decided to give to companies 80 billion euros by 2026. And this action will be part of a broader scope of the initiatives of the National Plan of Recovery and Resilience. Now, here we can really contribute significantly when achieving the economic development and other goals, for instance, because the projects of circular economy are projects of new competitiveness, of new competitive edge for businesses, and also environmental safeguard, 8, 12, 13 goals according to the UN SDGs. Also, part of this theme of this arena is hydrogen. Now, this is key to achieve the goal 12 and 13. The European Clear Hydrogen Alliance has been launched by the European Commission. This is a systemic bank and has been the first Italian banks, one of the first European banks admitted eligible for this organization. And this allows us to provide a very substantial contribution. But there's another place where the financial system, given the number, the breadth of its customer base, can contribute equally meaningfully. This is the dissemination of the sustainability culture, as well as training, educating people on sustainability. Now, here what is extremely important is expanding financial education programs, directed for young people. And banks are extremely committed through the Foundation for the Financial Education and Saving. We are really expanding, enlarging this to the themes of sustainability, so that the upcoming citizens of tomorrow who are young today, when relating to banks in their economic activities, they all will be able to make, educated choices in terms of sustainability. There's one initiative which I think is very interesting. The initiative was created in Intesa San Paolo Formazione, education and training, is to, direct to our clients and companies many educational activities, specific activities through an online platform, by customizing these programs with dedicated workshops, training programs, or educational initiatives like masters courses. These are all the number of ways a bank can engage its customer base, its clients, through business activities, advisory, or collateral and excellent additional activities. Excellent, thank you. One final note. Goal 3, as came out in the previous panel, we mentioned the effect that COVID-19 may have had on achieving these goals. Well, the pandemic has pushed to the surface Goal 3, which is based on health and healthcare. And Intesa and many other banks on this have been providing contributions to, help and support the emergency. Banks need to be extremely flexible when it comes to continuously adapting, adjusting their strategies, because they feel part of a cooperative process, advancing and progressing towards the achievement of these goals. So I don't have in mind a fixed, solid strategy, identify the 3, 4, 5 goals to be achieved, but to entertain a continuous conversation with the regulators, institutions, being very much flexible in order for us to modify and change our approach very quickly, and focusing very much our attention on what is most important at that specific moment or time. Well, of course, I understand that the ESG terminology will have to become more common for a broader audience. We do need, as a financial system, we need counterparts and parties to have a conversation with on what the priorities are, and really capable of identifying with us the top priorities. Thank you. Thank you so much for this contribution, Damiano. There are many places, ambits where the financial world can have either a direct or indirect impact. Let me now move on to an experience of a corporate, a company, a utility. Federico Baroncelli, I'm talking to you. My question is, how do these ESG, net zero carbon measures, how do they work in Enel's strategy? Good afternoon to all of you. Thank you for having me on this panel. talking about the integration of ESGs in Enel's strategy, Enel has decided not to cover all of ESGs or SDGs, but it only concentrated its attention on those few SDGs that were directed in the company's strategy with the goal to create financial value for the company, but also for its stakeholders. So we have identified 4 SDGs that are extremely important. SDG 7, affordable and clean, energy number 9, infrastructure, 11 on sustainable cities and communities. Well, you know, these 3 SDGs, they all aim at a final goal, which is common to all, number 13 on climate change. Now, regarding Enel and its industry, climate change is the key engine, the driver of the company's strategy. Why is that? Well, simply because the company, Enel, has given itself 2 guidelines, which is low carbon goals for power production and electrification of consumption, consumer spending. These 2 guidelines are managed through a platformization, he's saying, of operations of the business. These goals are extremely important. Why? Why are they relevant? You know, because through decarbonization and electrification, the company, the corporation will generate more financial value, more money, in a word. So this is key. There is a fundamental connection between sustainability and financial worth, value. And as a result, based on this framework, we have identified our action all across the value chain. We first started from investments. 90% of our capex addresses the 4 SDGs directly. Then finance, in addition to investments, Enel was the first in 2019 to launch the sustainability green bonds called SDG bonds. They are completely different from green bonds because these instruments are not based on projects. They don't fund specific projects, but only one strategy, which has an objective, a specific target, a specific KPI over a specific time span, time horizon. Well, we did that because we wanted to provide a great visibility of where the company is going in terms of the strategy, and green bonds do not allow the company to do that, because through a green bond, the company may decide to fund specific projects and then continue and go on to issue CO2 emissions, produce CO2 emissions, you know, or alter biodiversity balances. So without providing a clear-cut vision or visibility of what the company is doing and how the company is moving, we believe that sustainable companies are less risky because they can address the risk of mitigation, the climate risk of mitigation, the regulatory framework and limitations, which we all know too well, the European system, or the limitations on CO2, not just in Europe, but also around the world. So this way, the company is better equipped and has better tools to pick up this huge challenge that is climate change, which is really transforming the way of doing business around the world. And then finally, we have a fully integrated reporting system. We have integrated in our reports sustainability goals in our annual report. We have an annual report that also includes the key aspects of sustainability, and it describes the links, the connections between value creation and sustainability. But we also have a sustainability budget on specific issues about sustainability that are then taken also into our financial statements. So this is pretty much what we have done. Enel is the first Italian company by market cap. The market cap is over 80 billion euro currently. It used to be 35 billion euros up until a couple of years ago. So, I mean, this is a strategy, a business strategy of sustainability, which is tangible, material, and has been extremely rewarding for us. Thank you. Thank you so much. Admittedly, you know, beyond any issues on sustainability, so the results that can be obtained for the company in terms of, you know, the environment and people, you have the story how to create shareholders value, and this is an element which is always very, you know, prominent anyway, whatever you do. So in the meantime, we're being joined by Mrs. Manuela Mazzoleni. So, you know, I would like to engage her and involve her in our chat, in our conversation. Let's see if we can have her join us. Thank you. Good morning, in fact. Yes, good afternoon. Thank you so much for making it. So let me recap a little bit, you know, what we have been talking about. We have started talking about financial corporate sustainability. We have tried to clarify the ideas about what it means in terms of funding, lending, loans, etc. But talking about assogestione, which you stand for, you know, the topic is SDGs. How do you encompass, embrace, you know, your asset managers that are out on the Italian market? What do they do? Thank you. First of all, thank you for having me, and I really apologize. I couldn't join you since the start. Unfortunately, I was on another, you know, webinar again on sustainability. It was very interesting because we had a conversation with the corporations, the companies that are strongly committed towards this transition to sustainability. They're also members of ASSO Gestione. The asset managers are for sure very much committed to this transition, you know, transition towards sustainable investments and a deeper and pushed integration, incorporation of their investments that, of course, will have to always be considering ESGs and SDGs. SDGs, well, this is only one of the way these companies are managing the problems of sustainability. There is no specific focus or generalized focus on SDGs, although some asset managers have opted for their communication and focus on their investment. They have, you know, decided to use SDGs. In general, what is guiding right now and driving, you know, the framework, creating the framework for more sustainable investments is very much pushed by the current regulatory system, the regulations. I'm sure you covered that in the first part of your panel discussion, you know, the sustainability package, which moved from before 2018, when the world of sustainable investment was and used to be a world only, you know, up to the freedom of self-regulation. Every investor wanting to propose to their investors a sustainable investment could do that, but decide very freely what to do and how to handle this kind of investments. They sometimes would use SDGs as a reference, but it was very much up to the imagination of these asset managers. Right now, the world has changed dramatically. In 2 years, we have moved from this absolute flexibility and freedom onto a different world where we have now pre-established silos, boxes that the asset manager can use. Those who produce the product, the investment product, have to comply with. So this is the current challenge right now. In other words, without losing disruption, innovation, creativity, the attention, the focus on a world that is rapidly changing, but right now, we must comply with these regulations, which are still changing. Some of them have been well-defined, others are still in progress. This is a regulation, this is brand new and has been put out in the field with great momentum, a great rapidity also on the part of regulators. But this is inevitable, and undeniably we are bound to come up against a few difficulties, as we can see for ourselves. This is a stage, a phase where there still are gray areas which are not fully clear, and there are, time-related inconsistencies when it comes to releasing the regulations, but most of them the SFDR was put in force in March 2021, and ever since the world has truly changed, as it were. But this has not discouraged our managers, asset managers. The Italian industry has for years been lagging behind with the outstanding exceptions, but by and large, it wasn't really in the forefront when it comes to sustainability. And now, in fact, they are catching up. And the data of Assogestioni show that 1/4 of the assets under management are already very much aligned. I mean, all of them are aligned because the regulation will apply to all of the products, but already a good 1/4 of the AUM is being managed in funds that are either Article 8 or 9, mainly Article 8, and 10%, belongs to Article 9. And this is for sure, very much evolving, going on. Informally, we know that our members are still doing a great job. They're still working on classifying of new products as Article either 8 or 9. So we'll see more coming out, going forward, an increase in this number. Our members, I repeat, I really, really put in a lot of effort on this. Thank you very much. Now, I don't know whether, you have questions. Our audience may write questions on the chat. If we don't have questions so far coming from the audience, I myself have a question for all the panelists. So we will be happy with a very fast, quick response. This was one of the things that came out on the first, from the first panel discussion on the reporting system. So my question is from you to you. Let me start from Banca Intesa first. When it comes to reporting system on sustainability, what are the challenges, when it comes to drawing up those reports? What improvements would you recommend? We've seen that the regulation is going through consistent and constant changes. So any tips for us? Yes. I think that the key topic, the theme, an issue is that the regulations are continuously changes, and they are all having a fallout on reportings, SFDR, the green asset ratio regulation, or standards that are coming on. They all have a fallout on our reporting system. And the reporting system, or reports, have one challenge, that they are very much directed to all of our stakeholders. We cannot think of doing so many reports of sustainability dedicated to each single category of stakeholder. So it's a very articulate topic, because there's so many views that need to be provided on different themes. Now, the focus is currently on environmental issues, but when taxonomy expands and broadens and extends to brown activities, whilst it's mainly green, but also to social aspects, additional challenges will be added. And for the banking system, most notably, what is key is the possibility of retrieving, obtaining information. Because the manufacturing, production companies, they have first-hand information, but the banking system has to turn to a number of contributors to get that kind of information of different size. You know, the expansion of the scope of the CSRD will further increase and expand the number of companies that are obliged to the sustainability reporting system. But think of the entire world of SMEs unlisted that slowly but surely will have to be reached out by the need for the bank to collect information. I mean, think about the green asset ratio. Where do we get the information? The information that the bank has to collect, where from? What, will be the sources of information? What will be the counterparts? So these are extremely outstanding topics and themes. Then I see two interesting themes. The first one is the single access point. The fact that we are getting to having one single access point to all, sustainability related information. I don't like saying non-financial information. I'd rather say sustainability. So the second point that relates to the first one, to the difficulties I mentioned, is the need to increase the level of standardization of the metrics. And in some respects, why not simplifying the metrics to provide more comparative possibilities and information collection capabilities. Very clear, very clear. Now, at this point, Federico, to you, over to you. Federico Baroncelli, what do you think as Enel, as a corporate? Maybe you need less of these things compared to the banks industry. But what kind of work have you been doing when it comes to reporting systems? Well, we had, our work problems too, between the European taxonomy and then WEF. There's a plurality of actors and protagonists out there, but this is obviously very good and positive, because this way you can have a multiple screen of viewpoints. What I think is useful is maybe to be able to collect a wrap-up, a synthesis, having too many indications. When you have too many requests of information coming from everywhere, eventually the risk is to miss the goal. The other thing is ESG, or sustainability information, is not the same for all. The relevance of certain information differs depending on the industry the company is. And I think that this should be very much allowed for when it comes to the data reported. There's no point in providing 500 billion ESG or ESG KPIs data, because it'll mess everything up and it will confuse investors. What they are looking for and need is the KPIs on the sustainability variables that are relevant for that given business, and that will help the business to create more value. Thank you. Thank you. Let me now go back to Mrs. Mazzoleni. Again, on this, knowing that in 2022, we'll also receive the entire additional sections or chapters that will be added for investors. My question is, do you think that Italian asset managers are ready for these additional changes that may come along? How will they treat, this continuously evolving regulatory status? Well, yes, because they need it, whether they like it or not, they need to be ready. They must be ready. They don't have any other choice, Well, of course, they might also make mistakes, but the attention, the focus, the commitment is all provided. Well, there surely is a problem of timing on all of this. The topics, the subjects, the challenges mentioned before, I understand, the width, the breadth, the granularity of the focus of the information. These are all issues that we have raised in the course of the number of European consultations and conversations with the authorities. They all have a response, the uniqueness of the data, of the information, the ESAP will take care of that. Standardization, EFRAG is doing a work. The granularity, the breadth of the data, we have the new CFRD that will provide a response on this, identifying certain key indicators. Well, we have the RTS of the SFRD. I mean, we have it all in a nutshell. So the key, issues have their own response. But, unfortunately, the timing is not with us. And the timing is not necessarily always consistent or structured. To start from the primary source of information and to move on and on as a cascade to the next steps. I have worked for 15 years on sustainability, 15 years. By the way, it wasn't my core activity. It was an interest, a sideway interest. Association was very present on these themes from the start, and it would take me one day a month. Then it boomed in the past few years. Had these things been done before, I always say this, with more time, we wouldn't find ourselves in this situation because, obviously the Commission has launched all of this immediately 2 years ago. And with a very tight schedule, all initiatives are, moving at the same time. This is the biggest challenge. The instruments, the responses to the questions are ready, are available. They can all be improved, God forbid. But I mean, the instruments are there. The problem is putting them out, and doing that in a very systematic, consistent way with a practical, obviously, structure that is not always present. This is pretty much the biggest issues which we see at hand. If I may jump in for a second, yes, of course, going back to the SDGs, in particular, SDGs date back to 2015, but it took us the pandemic to provide an acceleration, to turbocharge their evolution by the governments who decided and committed themselves on SDGs. Quite so, absolutely, absolutely. With the tragedy, thank God, we also have a positive result. I think that we are perfectly on time for our final remarks. I wish to thank everybody, all our panelists. Josina, thank you so much for your collaboration for CFA Italy, this roundtable between regulators and market operators. So I wish you a wonderful evening. Thank you very much again to all of the panelists. Thank you. Thank you.